Now let's discuss how to read Forex charts. And so, the price movements in the chart may be presented in different ways, and each type of a trading chart has its pros and cons. So let us cover each type of chart in detail and try to learn how to read them. So nowadays, graphic analysis suggests three main types of charts in Forex trading which displays the price. We have line chart, bar chart, and Japanese candlestick chart. So now let us move on and study the most important issue. So this chart type, which is the first one, the line chart, it was firstly developed at the very beginning. That is why it is the simplest and least informative. The chart is drawn rather simply. Each new period of time has two main parameters. They are the open price, which is the price of the new period where the new period starts, and the close price, which is the price when the time period finishes forming. So each of those parameters forms a dot in the chart. Then the dot of the price of the open price connects to the close price. And so the continuous connecting of dots draws, of course, a line. Nowadays, the price chart is seldom used as it doesn't provide any information about the price highs and lows, for example, during a particular period of time. However, some technical analysts perform their analysis basis on this type of chart because it is the most accurate for operating with the trends, as it smooths such things as a false breakout of the trend line or a price levels. Okay, so what we can add? The line chart is not suitable for trading according to the price patterns, based only on geometric shapes. So this trading chart is more efficient for longer time periods, starting from D1 and longer, as in the time frames a trend line looks like the price ranges, and to draw them, the key parameter of the price are important. And so this type of a display is often utilized in combined strategies based on the chart and some EMA, which is the exponential moving average technical analysis indicator, because it sends more exact signals to enter and exit a position. Next, we have a bar chart. So bar charts were developed after the line chart, and this type of chart is more informative and complex. It was created in the USA, so it is quite popular in Western countries. Most conservative traders in the West still don't apply any other type of price charts. So let's see what this chart contains. So the bar chart consists of a series of vertical lines that are called bars. In a bar chart, any trading interval is represented by a bar and a vertical line drawn from the lowest price to the highest price of the day. And so, bar chart expands upon the line chart, and the bars provide information more about the price, the highs, lows, in addition to the opening and closing price in a particular period of time. So, you know that during the price movement, it can go higher than the final closing price several times. And so, the price high shows that the highest level the price reached during the time a bar was forming. And so, the same is with low. Only the lowest price levels are analyzed. And so, vertical lines helps a technical analyst to spot the price trend within a particular period, which is very important for a thorough analysis of the price action in the charts. So in summary, the main feature of the bar charts are as follows. Number one, the opening price is the horizontal dash on the left side, yes, this is the left side of the vertical line, and the closing price is located on the right side of the line. And so, second point, bar charts come in two types, rising bars and falling bars. In the rising bars, the opening price is lower than the closing price. And for the falling bars, it is, of course, vice versa. Point number three. There are many special trading strategies to operate with bars. The main ones are pin bar trading strategy, inside bar trading strategy, and engulfing bars. So now we move on to Japanese candlestick charts. And so, candlestick charts originated, as the name suggests, in Japan, and have become extremely popular among traders and investors in various assets. It is traditionally thought to have been developed in the 18th century by Munehisa Homa, a Japanese rice trader who developed this method in order to track price highs and lows. And so the price chart is the most informative as it combines all main types of charts and surpasses bar chart as it also provides color information about a rise or a fall. So let's see what this chart type consists of. The candlestick consists of a black/red or white/green body and top or bottom shadow. Some descriptions include such concepts as the candlestick's wick. So, top and bottom shadows display price high and low for a certain period of time. The top and bottom of the candlestick body displays the opening and closing prices. And so if the closing price is higher than the opening price, the candlestick's body will be white/green. If it is lower, the body will be black/red. It depends basically how you set it, but those colors are default in most platforms. So yeah, when the closing price is the same as the high or the low, there may not be any shadows or just one. When the closing and the opening price is the same, there may not be the body. Such candlestick is called doji. However, no matter how informative this type of a price chart is, candlesticks do not contain information on price movements within the time interval. They neither indicate whether the high or low was reached first, how many times a price rose or dropped. To get this information, you should switch to a shorter time frame of the chart. Nowadays, the most popular way of displaying is a Chinese style, where a rising candlestick is green and the falling one is red. And so Japanese candles charts consist of a series of thin vertical lines. Each candlestick appears after the previous one has closed. And so several consecutive candlesticks, one above the other, form a rising trend, and the same with the downtrend. So, of course, the same in the opposite direction, but the color is then red. And so as the candlesticks are of different colors, it is much easier to identify trends in the chart because basically they look like a series of lines of the same color. So now let's see the main features of the candlestick chart. Number one, a special feature of a candlestick is that the opening and closing prices are displayed as the lower or upper boundaries of the candlestick body. For a growth candle, the opening price is always below, and for a falling candle, the opening price is always on top. Point number two, a candlestick can be of several types. Growth candlestick with shadows, growth candle without shadows, a candlestick without shadows and a body, a candlestick without a body but with shadows, and the same situation of course applies for falling candlesticks. So, point number three. There are many trading strategies applying Japanese candlesticks charts. There has even been developed a particular type of technical analysis that is called candlestick analysis. And so the analysis suggests looking for repeating combinations of similar candlesticks, and they are called the candlestick chart patterns. Nowadays, there are over 100 patterns, but a few of them are really popular. Okay, now let's look at the more complex and rarer types of Forex chart displays. We move to Heiken Ashi candles chart. So, Heiken Ashi candles are an offshoot from Japanese candlesticks. Unlike the Japanese ones, each new candle opens at the middle of the previous candlestick's body. All the rest of the charting parameters are the same, but these candlesticks filter out some noise in effort to better capture the trend. So Heiken Ashi often have no shadows because the price first needs to cover half of the body of the previous candlestick in its price movement, and this is exactly where the full potential most often goes to, and the shadows is simply absent, which indicates the strength of the movement. So, taken together, Heiken Ashi represents the average pace of a price, we could say. The candlesticks filter out some noise in an effort to better capture the trend. And so, okay, let's see the main features of the Heiken Ashi candles. So, number one, Heiken Ashi candles chart filters out all market noises, and so you see the trend alone. In fact, the chart is a trend line technical indicator. Number two, when the trends are displayed in the Heiken Ashi chart, there are almost no opposite shadows. The length of the shadows and the number of candlesticks indicate the trend strength. Point number three, in the Heiken Ashi chart type, candlestick chart patterns like doji, for example, are much more important. So, when you operate with common candlesticks, a doji is a kind of stop sign. But in the case with Heiken Ashi candlesticks, this chart pattern is already a strong signal of the trend reversal and so of an entry. So due to filtering out minor sideways movements in a chart indicates strong trends and hides slight corrections. Next one is area chart type, which is of course an offshoot from common line chart. But it displays the price movements by means of areas. Its main advantage is that the area charts are very clean and simple to use. Filling the space below, the price really highlights the price trend and clearly displays local price movements, spikes and dips in any trading periods. So this charting technique is usually used to display the profitability of investment objectives. So now let's see again the main peculiarities of area chart. Number one, a feature of this type of a price chart is that local price movements are clearly visible, such as correction and minor dips within time interval. Point number two, an area chart is a great chart type to discover and identify chart patterns. Number three, it clearly shows price changes in relation to previous period. It highlights the price action without complicating it. So, field areas make it easy to memorize the price action. If you need to remember the price chart, then an area chart is an ideal choice.